Yo, yo, good morning. We got U.S. pending home sales that just dropped. Oh, that's a good number. No, it's not. No, it's not. So theoretically, people want to see the dollar fall from that. Doesn't always happen that way. So I don't care about the actual numbers of the news. That's a terrible negative number. People expect the dollar to crash down. They could make it explode to the upside. There we go. Oh, I wasn't centered. That's good. Here's a reason why I'm not trading this week. Look what happened here. Yeah, these are 1 minute candles. We shot up 160 pips in 2 minutes, and then we came down 200 pips in 5 minutes. Yeah. Yeah, your broker probably got you out in here if you had a stop loss or take profit. They didn't. That'll blow your account for no reason. There was no news. No one could have predicted that. It's very scary. Very, very scary. There's not much reaction right now off those home sales. Everyone's probably waiting for stupid Powell to start jabbering. But let's put up some imbalances that we see. See if the algorithm wants to go after that. We've got equal highs. Everything in here seems filled in. See if there's any reaction off that. Bullish order block. Look at the reaction. Not too bad. ICT is tweeting a storm up right now, which is good. ICT, Michael Huddleston. That's who I learn everything from. Go on his YouTube. Check him out. He's the GOAT. He taught me there's an algorithm that controls the market. It was a little scary at first. I didn't believe him. But if you watch how price is very predictable, you'd agree too. So right, down close candles before an up move, price comes back down. If you use this as a buy by itself, it went against you 50 pips there, and now we're up. It went up 100 total, but again, the pound is moving in a dangerous way, so I'm not touching it, even if I was trading. The euro is a little more reasonable. So look at this. We got turtle soup. Take out the low. Take out the low. Move up. Higher lows. Come up again. Higher low. Mean threshold. Bullish order block. Going higher. We'll see if this order block here holds. Got a fair value gap here. Look how beautiful this is. So all this, there's no imbalances in here. They filled in there. There was an imbalance right here. Price coming down, closing that in. We'll see if it wants to go higher, above whatever people want to call this trend line. Trend lines don't work. Sometimes they do. Maybe 20% of the time. I don't like those odds. If you told me at the casino I'd win 20% of the time, even though it seems like that's how much I win when I go, I wouldn't go. 50-50? Okay, not 20. So let's see. Yesterday's high. These are each day. We got Monday's high here. So this could be Wednesday low of the week. Typically, the higher low of the week will form 70% of the time on either Tuesday, Wednesday, or Thursday. I'll do it on this one. One, 2, 3, 4, 5 hours ago. Let's see. 1, 2, 3, 4, 5 hours ago. So at the same time that the pound shot up 100 and 200 pips, the dollar dropped almost 80 pips. And at the same time, one, 2, 3, 4, 5. It's not the best angle. So that's interesting. Dollar dropped almost 80 pips. Euro went up 65 pips. Euro went up 200 pips. So what does that mean for the beast? I'm going to guess that the beast here went up like a rocket ship. Yep. SpaceX, Tesla, to the moon. So we got the bodies respecting this bearish order block. We do have an imbalance up here. We should see fireworks in about 6 minutes. Well, let's say 6 to 20 minutes. So price might want to shoot up in here because we created an equal low down here. So people that don't know what they're doing see this and go, oh, that's safe. Could be safer today. They will go for those at some point. Come on. We could come in here and bounce up. We could go straight up and then come down. I do expect to keep this in, at least for the intermediate term. That seems like a pretty significant high they built in. Look at that. Look at that. Wild. Dollar's still not doing much. Everyone's waiting for Powell. I won't watch his speech. Again, I don't care what he says. Oops. See, right, if you trade off of the results of the news, shouldn't the dollar be tanking for the last 11 minutes? Right? Any person who trades like that is like, oh, the dollar's got to be going down. Look at that. That's not good. Negative 2%. But we've gone up. Now the dollar could definitely be coming up into this area to just fall when Powell speaks. Which, if I had a gun to my head, I mean, it's tough to pick a top in the dollar since it's been so bullish. You know, people thought that this was a top or this was a top. We had equal highs come down. We ran those highs. Then we ran it again. Considering that we came below, we took liquidity here, came back up, and then we failed again. This does look pretty bearish. So if I had a trade, I wouldn't be looking for the dollar to go up. I would look for some liquidity to be taken down here. So let's do this. See, I wish they had an X. So instead we'll do a stop sign. Oh, it is an X. They label it stop sign. That's reasonable. All right, so equal lows, relative equal lows. I wouldn't be surprised if we either fell off this level or if we came up into that imbalance. Right here. What's so important about an imbalance? Well, see, the market's controlled by an algorithm, IPDA, Interbank Price Delivery Algorithm. So back in the day when there wasn't computers, they would do this by hand. But now you just create an algo and price moves like clockwork. The key is time of day, though. It doesn't just randomly fill in spots. So we're in New York Open, right? Well, we're in New York session. Open was at 7. So all the bank traders, all the big funds, they're active. They're trying to make money, trying to make that percentage point, right? You give the bank $1 million and they say, oh, we'll give you 10% a year. But they're not making 10% on that million. They're making 40, 50, 60%, and they're keeping the rest. And a dude is sitting at his computer. Now his screen don't look like candlesticks like this. They're a little more advanced, I'll say. And they're making their money. So at the moment, we are respecting this bearish order block. Right? So if you knew where price was going and you had billions of dollars, are you going to buy price when it's going up? Or are you going to buy price when it's going down to get it at a discount? So it's the same if you're going to sell. Are you going to sell as the market's dropping? Of course you're not. You're going to sell when it's going up so you get it at a discount. Because everyone's greedy. I don't care who you are. Some are more greedy than others. So right now, Powell's speaking away. We got equal highs in here. Come on. Might want to run for those. We talked about euro with all the liquidity we got above these highs. Just a very dangerous time to trade. Not high probability. You could probably get some moves, but I'm not risking nothing. I wish I was. It'd be a little more entertaining of a stream if I was taking buys and sells. I'm waiting for old man to speak. Yep. Everyone's waiting for the old man to speak. I feel like when he speaks, he almost says nothing for most of the time. And then there's a couple key parts where talks about inflation and here's what we're doing about it. Yeah, you should have been doing something a long time ago about it. You know, when you saw your government consistently printing trillions of dollars, you should have known that inflation was not going to be transitory, you fool. Anybody who took high school economics could have told you it wasn't going to be transitory. And then they keep seeing that CPI number extremely high, and they're like, all right, we're going to do 3/4 of basis point, and they're going to do another 3/4, and then probably another 1/2 point. And then the cycle continues where the rich get richer and the poor get poorer. One thing we don't want is stagflation. Stagflation will be a big problem. Congress just had, I think, 8 of the biggest bank CEOs, and they all said the same thing. Nothing. They were actually mainly talking about the loans that the government approved for all these regular people, or small businesses, I should say. But now they're making the banks require higher capital, so another 2008 doesn't happen. Which the banks don't care if that happens again. They know the government's going to bail them out. So they're all sitting up there happy and cheery. Oh, we're good. We don't care. The banks can do no wrong. Should have been a banker. I would have been an ethical banker, though. I say that now until I'm in there. Still not really having any kind of reaction off the dollar. Let's see what gold's doing. Oh, gold, baby. Yeah. I thought gold was going to be taking out these highs. We've been moving lower. Gold's very manipulated too. Gold's a little sus to trade. Doesn't always be the inverse of the dollar, even though it technically should be. So we came up to an old low here. Retail sees old low as support, term resistance. It could be, don't get me wrong. But I'd much more rather see. Look at this nice big up close candle. We got an imbalance here too. Institutional order flow entry drill if price were to come up in here. So I'll leave this up during all this chaos. I guess that'll be pretty reasonable to see gold continue higher if the dollar is going to go lower. But the dollar could come up and consolidate in this area, fill this in, consolidate here, and then drop, which would give gold an ability to come up here. But don't get me wrong, the dollar can collapse down and gold can still go up a bit. It won't go up as high if the dollar is collapsing, but gold does not have to follow. Like euro and the pound. The dollar falls, euro and the pound have to go higher. It just depends on who's going to go higher between the two pairs. And if I had to guess, if we're going to drop lower here, which means euro would be weaker than the pound, I would expect the pound here to shoot up, take out these highs. There's a small imbalance up here. Everything else seems pretty. There might be a little one here. Let's see. 0.95555 low. 0.959. Yeah, so about 4 pips of an imbalance right here. About right there. There's also crude oil inventories at 10:30, but I don't think that's going to do much. Stay hydrated, my friends. So I'm trying to work on the numbers here. They're a little blurry. I noticed on my stream. I'm trying to experiment to see why that is. See, it would make more sense if I was maybe a little blurry, depending on what kind of camera you have, but I think I'm pretty clear. I mean, I'm kind of in the dark. Let's do this. That's a little bit better. Forgot my screen brightness was down. Been burning a hole in my eyeballs from my screen being too bright. Still nothing, still pretty quiet. Let's see what ICT's tweeting about. E-mini S&P. He bought it before. So if he's buying the E-mini S&P, he's looking for the dollar to go down. Oh, look at that. It'd be really nice to see algorithmically, it's a tongue twister, price fall from here, just for the fact of, yeah, we left in highs here, but we came below a swing low and equal lows, and then when we came back up, we didn't create new highs, and then we fell again, took out the low again. So at this point, we would want to see it continue to drop and respect areas of up candles. So we got 6 minutes till this candle closes. So if this candle, let's say, closed up here and it was a big blue candle, and then the next candle or the next couple candles were down close candles, and then continue dropping lower, and then we came back up into these old candles, and then continued lower, it would be nice order flow. That's what I would be looking for if I was in a trade. Right, so it's kind of like here. So we have up candles, we drop lower, we took out the low here, we came back up, we respected the up close candles. I was actually here too, right? Respected on boom, we drop lower, we come back up, we respect the up close candles, we drop lower. What do? Respect these up close candles, drop. I don't think we got back up into, we didn't there. So far, even though this candle is wild, At the moment, it's respecting these up close candles. Obviously, if we're changing our premise from bullish to bearish on the dollar, we would expect to see this broken now. But down here, we have a little bit of a consolidation and then a potential reversal, right? So now we have price coming up into here, now making a new low, coming back up, taking out the buy side, coming down into down close candle, good reaction. Totally missed. So it would have been nice if this candle opened, came down, touched this wick, and then moved higher. But it doesn't have to. Because we have these wicks in here, it's already balanced. Right? So this candle came down, closed this in. So there's no gap in here. There's no gap here because this wick came down into this wick. We filled that in. We came down in here and filled this in. So when everything's filled in, price has the go to move. Right? It's like we see over here. Yeah, there's a little gap in here. But wick, body, wick covers here. We have that little opening there. Price comes down. These down close candles. Price moved down and then price moved up. So that's filled in. See, price doesn't have to come down in here and fill this in because these down close candles are negated by these up close candles. So the way you think of it is this. You have a down close candle, pretend that's red. Right? We'll just do that. So wick comes down, closes red, so it's like this candle. The next candle will open down here, and you might have, let's just say, a bigger wick. And this wick that goes below here might fill in a previous candle, and then this is permitted to move up higher. So this candle closes blue, so now there would be a gap from this candle's high to the opening of the next candle, and you'd like to see a wick come down, close that in, so everything is balanced. When it's not balanced, that's when you look for the time of day and price to be aligned to give yourself the highest probability of it being filled in. See, ICT's concepts, they don't guarantee 100% success rate. It gives you the best opportunity, the best percentage for price to fill in. And that's why in my eyes, he's the GOAT. All right. This is when I'd like to see the dollar expand lower. All right, we've got the pending home sales come in, -2%. Price initially came up off that. Hopefully next week I can start taking some trades. Come on, Powell. Say something wild. Say you're thinking about making a 200 basis point hike. Really put some fear into the market. I do like this reaction though, that's nice to see. There we go. Okay, so see, this is tough. This is a tough read for the strength between the euro and the pound. I guess since we took out buy side liquidity up here from this high, right? Clearly took it out, broke lower, came back down, so we failed to make another high off this order block. I guess that means that it's more likely to be bearish, which means between these two pairs, the pound is going to be more bullish, which makes sense considering we've had such a giant sell-off. It's reasonable for it to consolidate, come back up. It's probably, I mean, it's going to be bearish long term, but it makes sense for price to want to come back up here, clean in some of these imbalances, take out some stop losses that are trailing from sellers, have people second guess their sells. See, people think that when you're in a trade, the hardest part is when you're losing in the trade and you're negative on your profit, when in reality it's just as hard when you're in profit but you're not at your take profit yet. So if your take profit's 10,000 and you're like 2,500 in profit, fear sets in going, well, I'm up 2,500, I don't want it to reverse on me, so I'll just get out now. And then price goes up to your 10,000 and you're like, I knew I should have stayed in. So I got to trust the process. And don't ever celebrate and don't ever kick yourself until the trade is closed. You could be 1 pip away from your stop loss and price can reverse and go in your favor. I've had that a few times where it was 1 pip away and you think you're going to lose and it reverses. And the same thing with your take profit. You can be 1 pip from your take profit and thinking, yeah, about to sell it, yeah. And then it reverses a bit and starts consolidating and you're like, man, I'm 15 pips away now. Well, that's why it's good to have partial profits. Takes that fear away. So if my profit, if I bought, which I didn't, so if my take profit was up here and my stop loss was below here, you would want to take something off up here, maybe take something off around this area, and then you can put your stop to break even and then let the trade run to hit here. And if it doesn't, you bagged in profit, so you're not worried about it. But if you just hold the whole trade, you're going to be stressing up until it hits it. It's not healthy. I used to stress a lot. I still stress while I trade, you know, I don't think anybody takes a trade and is just, okay. There's got to be some kind of stress in there to keep you focused, keep you on point, keep you aware of what's going on. But if it gets to the point where you take a trade and your blood pressure goes up and you start sweating, yeah, you might be better off taking a trade, closing the trade down, like closing the page down, getting away from your computer, and then letting whatever happens, a full stop or a full take profit. That's what I used to have to do. I would take it and then I'd leave the charts. But the problem with that is you lose out on taking partials. So you just got to accept the fact. But I also didn't have good risk management. I was risking too much. I was risking, 2.5%, 3%, 4% per trade, which is Not sustainable. Unless you're taking one trade a week and you're cherry picking your exact setup, but even then, you have a 3, 4, 5 trade losing streak, you're down 15, 20%. Tell me how your trade psychology is when you're down 20%. All right, so here's a 5-minute for the dollar. So we came up, nice reaction, boom. For a bearish dollar, I would want to see price come up to here max. It doesn't even have to. It's actually better off if it doesn't come up and close that. Because if a pair is extremely bullish or extremely bearish, you want to see some gaps stay open, because it shows we're not in any rush right now to close those, because we have an objective lower or an objective higher to meet, and we'll fill those in another time. Because if it fills this in, right, let's say it fills it in perfect and then drops low and then comes back up, I don't like seeing second retest of gaps be touched. Same thing, like I don't like a bearish order block to be hit multiple times, because the more times it hits it, the less likely that it's going to be a verified order block. Like if this was an hourly chart, each candle was an hour, I want to see price come up, hit this order block, and then immediately go lower and then not touch it again. It makes sense though, right? You don't want price to be sticking around an area where you're buying or selling. You want to see it move away quickly, preferably in profit. Like imagine these are hourly candles and you took a buy or a sell in here, and price is just doing this. It's not favorable. Every time it goes in your favor, you're gonna go, okay, finally it's moving, and then it comes back up, and then you're like, oh, is it gonna stop me out? Oh, okay, it's in my favor. Oh, is it gonna stop me out? Now obviously this moved lower, which eventually is what you want to see. And sometimes price will do that. Price will consolidate and then move. It's just not what you want to see in an ideal trade setup. Yep. I'm not going to say not much going on, because price has, moved to the upside a bit for foreign currency, but nothing that gets traders excited. Well, all right, I lied. The pound, even in a consolidated move, is going to move 50 to 100 pips right now. But if you're in a normal pair, like euro, so let's see the time. I mean, this is up 60 pips, but it's not, look, it's very condensed. Would you rather be in a move where price is moving like this, or in a move where price is moving quick like that? Obviously quick. Price is moving quick, the algo's working. The algo's in motion. Inner Circle Trader, it's ICT. What's his Twitter handle? I_M_the_ICT. It's kind of an annoying, annoying Twitter handle. I wouldn't be surprised if we stay in the consolidation today. The market's been getting beat up. It's been moving in big ranges. After big ranges, consolidation. Most likely. Like if you're trading a pair, or you're looking to trade a pair, and on Monday, there's a the whole day is 150 pips, you probably don't want to trade the next day, because you're going to have people that see that big move and then they want to get in the next day. Okay, now I want to, it went up 150 points. I want to buy today. Price is going to consolidate, most likely. They don't want, the market doesn't want you to make money. The market doesn't want me to make money. Now, most of us are trading with a broker, so we actually don't see the actual market executions. We trade off the broker. Just like your broker doesn't want you to make money. Your broker might say they want you to, but they don't, because they're paying you out. They'd rather you deposit $5,000 and lose the $5,000. It goes to them. That's why ICT 2 days ago, with his broker, he was in profit, I want to say like 8 to 10,000 on the E-mini S&P, and they wouldn't let him get out. He would hit close trade, and it would say error. You cannot close this trade. As it was falling, he was selling it. He was trying to close it multiple times. He put a video on his Twitter, and the only time they let him get out is when price was coming back up where his stop loss was. So he put his stop loss however many points in profit, but he lost out on, when it comes to that, it's handles, but he lost out on handles of profit, where I think he said they owed him, it was like 6,700, 2,000, 1,100. So I think they owed him like 10,000, and he made it known very clear that he was going to get his mother money. He did a big rant on it afterwards. He went into Space, which is an app where you can like speak into your phone, and it's like a podcast almost type thing. And he said very clearly, I've got lawyers waiting. I'm getting paid. They're going to pay me one way or another. Good for you. Get your money. Always get your money. Don't ever work for free. I learned that a long time ago at my jobs. I'd work at Fry's, and you would just get a 15-minute break because you'd work under 6 hours shifts. And sometimes I'd be like, hey, you know what? I'm not going to take my break. And someone said, hey, you always take your break. You're working for a billion-dollar company, hundreds of millions, whatever you want to call it. You take your paid break. I got a buddy's dad who works for UPS. He's a UPS driver. He was working 60-plus hours a week, and they kind of try to tell you to take your break, take your lunch on the clock, so don't actually clock out when you're in the truck. And they'll tell you at the end of your shift, they'll tell you this, at the end of your shift, drive into this warehouse, and then you sit at the warehouse for 30 minutes, and that's your lunch. No, your lunch is, halfway through the day, you don't work, you eat your food. My friend's dad would eat his food while he drove so he can deliver more packages during the day. And that's what they want. But always take your money, always take your breaks. You don't have to take advantage of them. You could, but definitely take them. Oh yeah, we've gotten 33 views so far. Let's go. There you go. Come on. Just do it. Just take out this low and this low for me so I can say, okay, market's moved. But if you come back up here, then it's who knows. Oh, look at that. Nice. Yep. Yeah, so it looks like between these two. Hey, there we go. That's not the one I wanted. Let's see if price wants to. Now, because this is a wick and it was on, what did I say before? It was 2 minutes up and then it took 4 or 5 minutes to come down. So price might actually want to run through here pretty quick and pretty violently to kind of resemble the same kind of pass through on this, right? So it was quick and violent coming down. So it's not going to be most likely, a couple minutes, but hopefully it's a couple more 15-minute candles to take this out instead of 15, 15, 15, 15, 15, 15, 15, 15, 15. See, the cool thing about gold, that's 350 pips, which is actually, it's definitely a bigger move than an average day, but even on regular days, gold will move 200 pips, 250 pips. So if you can get a good entry in gold and it moves in your favor, you need to have typically, if you normally will have a 20, 30 pip stop on regular currencies, you'll probably want to have a 50, 60-ish, maybe even higher pip stop on gold because it just moves. Like this move right here, 150 pips, 300. See, I never understood people who trade while the candle is, forming. Now that's different than saying, oh, well, what do you mean? If you're trading when a candle's forming inside of a bearish order block, you're selling. Yeah, right. I'm talking about people will see this and go, oh, it's a bearish engulfing candle, look. And they'll trade off of the actual candle. You have to wait and see how the candles close, where they're closing, what area. Someone might see this starting to go down and go, okay, it's a sell. And it's like, oh, you don't know what you're doing, okay. You're emotionally trading and guessing. Could work sometimes. Do that for 10 years straight and see how profitable you are. I'm going to give this another 10 minutes, see what price does. It's kind of boring though. Not the fireworks I was expecting. This move though is still, this is an impressive day regardless, just the price action of, and I said it in my last 2 live streams that I'm not trading this week because it's dangerous to trade. This is very dangerous. So I have an FTMO account where if we lose 5% in a day, you lose your account. So if I'm selling the market in here and I have my stop loss up here and I'm risking 2% on, let's just say 50 pips, well, 2%, let's say your stop loss doesn't get hit, that's 3%, that's 4%. That's just about an extra. No, I lied. If I'm doing 50 pips at 2%, it went against me 100. Oh no, it's 100 more pips. Yeah. So that's 6% total. Lose my account, and I can go to them. And actually, this happened to me during during one of my challenges. I had a stop loss in, and a news hit. And it didn't go crazy above it like this, but it did skip my stop loss. So instead of, let's just say, 30 pip stop loss, it was really like a 45 pip stop loss. And that extra 15 pips cost me 5% on a day. Because during the challenge, I trade more risky because it's not live funds at that point. You're just trying to get to the live funds. So I'll be a little more risky. And I lost 5%. And I emailed them support, hey, my stop loss was slipped, so I don't want that 15 pips go against me. And they go, that's the market. You have to account for stuff like that. Sorry that happened, but that wasn't us. That was the market. And I was like, okay. Better for it to happen in a challenge than in live funds. So, I took it on the chin and I just did another challenge, but it could happen. It's real. But everyone thinks, not me. Yeah. I've heard stories, but listen, I know what I'm doing as a trader, okay? It ain't gonna happen to me. Okay. Good luck. Right? Up close candle, boom. We respect this up close candle. So if we're bearish, price should not go above this high, especially for the time of day that it is. I mean, when news comes out at 10, 10:15, 10:30, you can allow price to move until about noon, right? So normally if I'm in the New York session trading, I want to be out of my trade by 11 max. If my trade doesn't hit one or the other by 11, I'm most likely going to close the trade. Because when it's lunchtime, the big bankers, the big institutional traders, they're not trading no more. They're out to lunch, or their day's done. They're with their families. That's why most of the volatility comes in London and New York, because that's when all the traders are in. Now, when there's news later on in the day, yeah, those traders can stay longer or just have more orders in the market past the normal time where they'd be out. So like today, yeah, price could keep going until 12 or 1. I mean, shoot, lately I've seen price keep moving crazy 2, 3, 4, 5 p.m. So we'd like to see the mean threshold, or the 50% of the body's candle, stay intact. Let's see if we have any SMTs in here. So we've got 1345, 1350, 1345. Okay. So let's see something. So Euro made a higher high during that same time period. The pound definitely made a higher high, but the dollar made a higher low. So this could just be creating this to come up in here to just take lows out. Ideally, what you'd like to see, if you think it's going to be reversal, is, let's say this was a higher high and then this one was a lower high along with a higher low. I'd be more inclined to say, okay, that's distribution in the algorithm basically tipping its hand saying, hey, this is weak compared to this, and since the dollar is making a higher low, we're reversing. But since it's all moving in tandem, I would be inclined that this is just a normal retracement and we're going to keep going into the direction that we're currently moving. ICT, nothing has presented a short opportunity this morning, but he trades the E-mini S&P, so it's a little different. Very nice, very nice. And gold's doing a little consolidating up here. We're above highs. Now as a buyer, if I was a buyer in gold, I'd actually like to see, after we go above highs, I would rather see price consolidate for a bit. It gives me more of a chance of it not wanting to reverse. Because if it was a true turtle soup, like let's just say down here for instance, price took out this low, then we failed to make another low, and then we had an explosive move up, which could be looked at as a break in market structure. You know, whether you want to call it this one or this one. Come back down, institutional order flow entry drill. So this would be okay. This is a turtle soup move, but this right here, I would not look at this as a turtle soup because we're consolidating above highs. Now, just the way the pound's moving, I would expect this to violently take out this high. As long as the dollar comes down and takes this low out, I would expect this to be violent. Well, here's what I'm going to do. I'm going to leave my charts exactly how they are. There we go. And let's actually see what time we're going to come on tomorrow. So tomorrow, yeah, we'll be back in a New York session. So there'll be plenty of candles in between. We actually have a pretty busy New York session. Unemployment claims. See, unemployment claims were huge during the pandemic, right? Those numbers. Let's look at some of these numbers. Yeah, look at these numbers that were happening. I wonder why so many people are losing their jobs. Oh yeah, because they weren't allowing people to work, jerks. Look at this, million, 1.4 million, 1.4, 1.1 million, 2.5. Oh, I forgot, 5 million, 6 million. Incredible. The market was taking these into account big time. Nowadays, the numbers are pretty normal-ish. I should say they're not as extreme, so it isn't such a big deal. It will influence the market, don't get me wrong, but it's not going to be like how it was. So, I bear you in a do. I bear you in a do. See, Michael, I just saw your comment. Forex Factory, man. Forex Factory will always tell you what time everyone's speaking. That's what I use. That's what a lot of people use. But everyone who tuned in, I appreciate you. I'll catch you tomorrow.